Airbnb just released their latest quarterly figures, a good quarter, but guidance was a bit weaker than expected, and so at the time of making this video, stock is down close to 14%, which would mean that year to date it would be down even more, which would close to 10% or so. Now overall, if the stock continues to go down, but the business does okay, then what you'll get is just a cheaper company to buy. Even today, forward PE 28.1 times, EV to EBITDA 18 times, price to sales 7.2, price to free cash flow for a company that has free cash flow margins closer to 40%. That's quite good. Price to free cash flow 19.6 times, price earnings to growth at 1.93. Overall, it is of course not the cheapest out there, but definitely cheaper than before. And remember, right now the average analyst price target sits 17.3% higher than the price we're at today. It's actually at $153. Fully expect that to drop tomorrow. So what exactly has happened? We're going to cover that right now. I'm going to cover maybe Rivian or SMCI later today as well, so stay tuned for that. If you enjoy this type of videos, hit all the buttons, like, subscribe, notification bell on so you don't miss any videos. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So overall for the quarter, we've got a small miss, 0.1% for bookings, but then a beat for revenue, EBITDA margin, free cash flow, and then a 1% miss for nights and experience booked. But for Outlook, it's a miss across the board. Miss for revenue, miss for EBITDA, and for EBITDA margin. Now, I do want to start off with a couple of things that Brian told us on X. So there were nearly 400,000 guests staying at Airbnbs in Paris for the Olympics, equivalent to 5 Olympic stadiums. For reference, the largest hotel in Paris has around 1,000 rooms. And there are 150,000 homes in Paris that are on Airbnb. So for the quarter, we've got revenue of $2.75 billion. That's up 11% year over year. Net income was $555 million and delivered a 20% net income margin, demonstrating significant profitability. As for adjusted EBITDA, that's $894 million and a 33% adjusted EBITDA margin. Overall, adjusted EBITDA is up 9% year over year. As for free cash flow, $1 billion. That's 41% for the trailing 12 months free cash flow margin, and it's up 16% year over year. It's an extremely profitable business. As for the last two metrics here, so GBV or gross booking value, that was $21.2 billion, up 11% year over year. But the small miss was nights and experience booked. That came in at 125.1 million. That's up 9% year over year. I believe the number that was expected would have been closer to 126 million. During the quarter, they repurchased $749 million worth of shares. Their strong free cash flow enabled them to repurchase $749 million of their share. Share repurchases for the trailing 12 months total $2.75 billion and helped them reduce their fully diluted share count from 686 million to 673 million. They have a remaining authorization to purchase up to $5.25 billion of their Class A common stock, which means if the stock does drop lower, then of course they can buy more shares, they can retire more shares for the same amount that they've repurchased this quarter and last quarter as well. A bit more information about the quarter. They say here in Q2 2024, we saw a 25% year-over-year increase in app downloads globally, with even stronger growth in the US. In addition, nights booked on the app during Q2 increased 19% year-over-year and now comprise 55% of total nights booked, up from 50% in the prior year period. In addition to our success with mobile downloads and bookings, we're seeing continued growth of first-time bookers on the platform, with the highest level of growth seen in the youngest age demographic. I believe they also have an integration with WeChat. As for these special events, the week of July 4th represented their single highest week of revenue ever in North America, and we're continuing to see more guests choose Airbnb for major holidays and events. In Europe, major sporting events are driving notable booking growth in anticipation of the Summer Olympic Games, Paris 2024. Nights booked in Paris region for the dates of the event through Q2 were more than double what they were the same time a year ago. To help meet this increased demand, we focused on supply growth and saw active listings increase 37% year over year in the Paris region as of Q2. And as we said before, 400,000 guests are staying on Airbnb in the Paris region. And during the recent Euro Cup in Germany, cities hosting matches saw on average a more than 20% year-over-year increase in nights booked compared to the prior year period, with certain cities seeing more than 50% growth. So, I mean, when there is a special event, when there is something happening, Airbnb is definitely one of the places a lot of people is going to. Now, I just want to show you and touch back on the free cash flow thing, because this is a business that is extremely profitable. If they can generate $1 billion in free cash flow, I mean, they're growing, right? So it can be more than $1 billion in future quarters. And that's now 38% of revenue. I mean, can you imagine what it will be doing in the future? They can invest more in the business, they can buy back more shares, they can maybe do some acquisitions, who knows? But this is an extremely profitable business. I mean, look at this, trailing 12 months free cash flow, $4.3 billion with a free cash flow margin of 41%. This is truly amazing. And of course, even though they grow, even though there is stock-based compensation, shares outstanding can continue to go down. As the company is generating more and more free cash flow, they're allowed to buy back more and more shares. Now, as I said, if the stock price does drop, then more shares can be retired. Now, currently, balance sheet and cash flows for the last quarter, they reported $1.1 billion of net cash provided by operating activities, as we've seen. As of June 30, they had $11.3 billion of cash and cash equivalents, short-term investments, and restricted cash. They also had $10.3 billion of funds held on behalf of guests as of the end of that quarter. Basically a bank. And of course, with high interest rates, as you can see, for the 6-month ending, so basically for half of 2024, they're closing in on $500 million worth of interest income. Lastly, of course, Outlook, which was the problem. So in Q3, they expect to deliver revenue of $3.67 to $3.73 billion, representing year-over-year growth of 8 to 10%, inclusive of a modest foreign exchange headwinds. So that was a slight miss. They anticipate their implied take rate in Q3 will be higher year on year, primarily due to the timing of bookings and cross-currency transaction fees, partially offset by investments in customer service aimed to enhance the guest and host experience, which impact contra revenue. As for nights and experience booked, they expect a sequential moderation in the year-over-year growth. Latin America and Asia Pacific continue to be their fastest growing regions. However, they are seeing shorter booking lead times globally and some signs of slowing demand from US guests. So this is something that you will see in the headlines right now or maybe tomorrow. Lastly, we expect ADR to increase modestly on a year-over-year basis. I believe for this quarter it was $170. In Q3, they also expect adjusted EBITDA to approximate Q3 2023 on a nominal basis, but for adjusted EBITDA margin to decline relative to Q3 2023. Marketing expense is expected to grow faster than revenue on a year-over-year basis, partially due to timing and investment in new growth markets. And so right now, what do we get? Well, we get a stock that has dropped. This is on the weekly, which will probably mean that it will be oversold just a tiny bit. But now we're revisiting levels not seen since October 2023, which was the bottom. Will it be the bottom yet again? I don't know, because again, saying that you're seeing slowing in demand, right now the market with all the macro data that we've got, definitely not something that the market wants to hear. But then again, this is a great company. Of course, was not the cheapest, but still a very profitable company to own, a company that will buy back a lot more shares each and every quarter. So in my opinion, an opportunity for long-term shareholders. Can it go lower? Every stock can always go lower. I always like to give the market a day or two until it figures out what it wants to do with a company that has dropped heavily because of an earnings report. So that's all I've got for you right now. See you in the next one. Like, subscribe, share all your thoughts down in the comment section below. And I see you probably for the SMCI video. Bye-bye.